Welcome to today's Explainer. We're diving straight into what is honestly one of the most historic corporate transformations we've ever seen. We're looking at SanDisk's Q1 2026 financial and strategic review. Now, forget the old hardware company you used to know. SanDisk has completely repositioned itself as an absolute AI-driven powerhouse. According to this report, they aren't just participating in the storage market anymore, they are quite literally aiming to be the engine powering the entire AI revolution. And wow, the market has fundamentally repriced this company to reflect that new identity. The numbers we're looking at show unprecedented validation. We're talking about a share price sitting right now at $1,187. Yes, you heard that right. That rockets their total market capitalization up to a staggering $175.20 billion. Now, what's really interesting about this slide is that translates to a jaw-dropping 3,300% one-year trajectory. And no, that is absolutely not a typo. A surge of that magnitude, it definitively signals that the market views SanDisk as the ultimate bottleneck solver for enterprise AI deployments. Look, as artificial intelligence gets smarter and more complex, it needs massive places to store data instantly. SanDisk is providing the infrastructure and the pipes to make all of that happen. Okay, let's dive into this. The core financial proof driving this whole surge is your classic hockey stick growth. A long period of relatively flat revenue, and then boom, a sudden, sharp upward curve. Driven entirely by this insatiable global demand for enterprise AI storage, their revenue has officially entered a hyper-growth trajectory, hitting an incredible $5.95 billion top-line revenue. To really grasp the sheer scale of what's happening here, we just have to look at the timeline. In Q4 of 2025, their revenue was at $3.03 billion. Just one single quarter later, Q1 2026, it hit a massive $5.95 billion. They are literally nearly doubling their revenue quarter over quarter. It's just staggering scale. But hey, top-line expansion, that's really only half the story. The absolute most critical paradigm shift happening behind the scenes is the total redefinition of hardware profitability. So the crucial point is how incredibly stark this contrast is. Think about this. Exactly 1 year ago, in Q1 of 2025, SanDisk reported a net income loss of negative $1.93 billion. Fast forward to today, they are reporting a positive $3.62 billion profit. That isn't just an incremental improvement, it is a complete revolutionary flip in their entire financial architecture. Which brings us directly to this exact phrase from the report: software-like margins. Seriously, physical hardware is notoriously expensive to manufacture, right? You expect lower margins. Not anymore. SanDisk is now commanding the elite metrics usually reserved for top-tier SaaS platform companies. We are looking at a massive 78.40% gross margin efficiency and a 60.76% net margin efficiency. Hardware companies simply do not see numbers like this. Let's move to and see how this builds out the rest of the picture. This explosive growth is backed by what the company calls total financial immunity. They've built what is effectively a fortress balance sheet. It's functioning as an absolute cash flow machine, generating $2.99 billion in Q1 free cash flow alone. That's pure cash left over after everything else is paid. And here is the ultimate punchline to all of that cash flow generation: $0 in debt. Zero. Through some incredibly aggressive deleveraging, they have systematically paid off their borrowed money. Absolute zero debt means they have unmatched capital flexibility moving forward. Now, if you're assessing risk, well, the report points out they actually have a permanent structural advantage. This AI boom is framed as a permanent shift in global computing, and SanDisk's tangible book value, the physical baseline worth of their assets, has surged past $8.78 billion. Plus, just to make sure they stay miles ahead of everyone else, they poured a massive $340 million into strategic R&D reinvestment this quarter alone. I want to end on a visionary high note and leave you with this defining thought, directly from the source material. SanDisk is operating from a position of absolute strength with unmatched scale for the next generation of AI. They have clearly built an incredible structural moat around their business. But it leaves us with one massive question to ponder. With a balance sheet this invincible and margins this historically high, is the AI hardware race already won, or are we just watching the opening moves of a much larger tech war? Thanks so much for joining us for this explainer.